All right, I think we've got everybody in now. Is that right, Carla?
Yes.
All right, well, we're at 12:02, so sorry for the delay. We'll go ahead and get started here. My name is Taylor Nilsson. I'm with Rizzetta Company, the business development manager, and I want to thank you all for joining us as we start our second edition of the Community Insiders webinar series. So today's topic is hurricane claims. What are you owed and how do you get it? This is a close topic, especially for all of us after last year's storm season, where we saw a lot of impact, especially for our friends over on the coastline. And actually, since then, we've started a storm recovery program through our field teams to help with that as far as mitigating and evaluating losses and helping set up teams for recovery. So again, a close topic to heart for us Floridians. Moving into this webinar specifically, I want to remind everybody that there is one CEU offered for community association managers. The course number is 963-3136. And you don't have to do anything. Hill's team will submit the attendance records to the DBPR on your behalf for credit. All the rest of the information is already gathered in your registration process. So before we get started, a couple quick housekeeping items. Note that all the participant devices have been muted to, of course, eliminate the background noise and allow everybody to hear. As far as the Q&A process, you'll see a little Q&A box up there, not the chat, but there's a Q&A feature specifically in the Teams. And you can use that to go in and submit any questions that you may have. And then during the end of the presentation, once we get to our Q&A portion, we'll read through those with Hill and his team to try to answer as many of those as possible for you all. So please keep in mind that we don't have all the specifics on your community, so try to keep the questions generalized to the topics. And with that, I will turn over to our friend Hill Crawford, public adjuster with Ask an Adjuster. Thank you, Hill.
Yeah, thank you, Taylor. Thank you for the introduction, and thanks to your team for allowing us to come in and present this today. This class is on hurricane claims, what you are owed and how to get it. We're going to talk about several things today. I'm going to click to the next slide. Can you see the next slide, or Carla, will you go to the next slide? This should be a welcome to everyone. We should have your CAM number. If you haven't, make sure you get that to Carla, and we'll make sure that we get that, like Taylor said, into the DBPR so that you can get your 1 hour of CE credit. At the end, there'll be a survey, and we welcome any input that you may have, that we could do a better presentation for me or my team to get you the best information. Hopefully, you're going to walk away today with some information that you can take back to your communities that's useful. And that's my main goal. Let's go to the next slide. This is a table of contents. This is what we're going to be talking about today. I'm going to tell you a little bit about myself, a little bit about Ask an Adjuster, who we are. We're going to talk a little bit about what is insurance, talk about policy coverages, what is the insurance claim process, how you build and navigate a claim, and then really what I think is the most beneficial is what we're going to talk about at the end, a certificate of good condition. And we'll talk a little bit more about that as we go on. This particular presentation is a little bit shorter than the full hour. It normally takes about anywhere from 40 to 50 minutes, if that long. So there's a lot of time left at the end for questions and answers. And we certainly welcome any questions that you may have. I'm on slide 4 now, Carla. Is that what everyone else is saying?
Yes.
Okay, perfect. So a little bit about me. My name is Hill Crawford, obviously. I am a member of FAPIA, that's the Florida Association of Public Insurance Adjusters, and what that means is the state licenses me, and I have certain ethical guidelines that I have to abide by statutorily, but there's a whole nother level of ethical guidelines that members of FAPIA have to go go through. If you do deal with a public adjuster, I would recommend that they have that credential and that they're a member. But I'm a Florida resident. I'm up in the Panhandle today in Pensacola, Florida. That is not my office. That's just a beautiful background that I was able to put on for today's presentation. I graduated from the University of South Alabama. If you detect a Southern accent, I've been in this area for a long time. I was a general contractor for 3 years, did a little bit of military service. I've been dancing in this insurance arena since 1995, opening up a Service Master franchise. I was an owner, my wife and I were. There we were preferred vendors for about a dozen insurance companies. And what that means is I was very regulated in pricing, as you can imagine, that I had to give lower prices to insurance companies that I would in the retail market. We did that for 13 years. I became an independent adjuster after selling that franchise. What that, and we're going to talk about the different kinds of adjusters later on, but I was an insurance company adjuster for 12 years. And during that time, I became Hague certified. What that means is for roofing, I had to sit in a class with engineers for a week, 8 hours a day, and let them teach me how to recognize wind damage, hail damage, things that are wear and tear as opposed to actual damages from a storm. I've adjusted literally over 3,000 commercial and residential property claims. I switched my license in 2021 to become a public claims adjuster, and I have provided expert witness testimony in actual court cases as it relates to insurance. And of course, the disclaimer that I'm not an attorney and I cannot give legal advice. Next slide. This is just a picture of our company. Basically, we handle the insurance company so that you don't have to, as will any public adjuster licensed in the state of Florida. A little bit about us, founded roughly 20 years ago. We've got 90 plus adjusters all across the state, from the Panhandle all the way down to Miami and South Florida. We've got a staff of 30 plus people, keeping the processes moving forward. We've recovered, and we're probably at 2 billion now. The slide says 2 billion. These are the areas that we have. We've opened up a new office in Glendale, California, expanding our footprint across the nation. These are just our brick and mortar offices that we have throughout the state where we're located. All right, let's get into it here. Insurance. Now, I understand that this information might be a little dry. I'm going to try and make it as interesting as possible, maybe give you a few stories as we go along to keep your attention if that's possible. But insurance, basically, who is it and who needs it? Basically, it's contract. It's a legal contract between two parties, the parties being a policy holder, the person who pays the premium, and an insurance company, the one who accepts the risk for various perils associated in the policy. Many of the CAMs, if there's CAMs on here, you're probably intimately familiar with Florida Statute 718, which is going to require all condominium associations to use their best efforts to maintain adequate insurance. But an insurance policy only has value if you can collect from it. This says fun fact. It's probably a fun fact only for me. But where does the term underwriter come from? Well, in the olden days, when they used to ship goods from England over to North America, they would put it on a ship, and there would be a bill of lading or a manifest of certain items, and certain individuals would take that bill of lading or a manifest and underwrite their name on it. And what that meant is if something happened to it, that they would make the person whole with whatever was lost during transit. An insurance policy, basically what is it? I talked about it being a contract, but it's a contract in legal terms, a contract of adhesion. What does that mean? Well, a contract of adhesion is when one person writes the contract and the other person just accepts it. For example, your cell phone, if you have Verizon or AT&T or any of the other carriers, they write the contract, you sign it, or you're not getting a cell phone. And it's the same way with an insurance policy. You either accept it under the terms that they have written, or you don't have the policy. Now, what that means, though, is that if there's any ambiguity in determining what's covered or not covered, then the tie goes to the person who did not write the contract, and that's important. The types of claims you can have, I know this class is on hurricane claims, but there's obviously several different kinds of perils that an insurance policy would cover: roof leaks, plumbing issues, mold, hurricane damage, HVAC damage, and water damage. Interestingly enough, most policies, if you read them closely, exclude water damage. They say water damage isn't covered. And then they go ahead and describe some conditions where it is covered. And things like if a pipe breaks behind the wall, for example, the policy wouldn't cover to fix the pipe, but it would cover to ingress and egress the wall. In other words, to cut out the hole to access the plumbing. And it would cover the water damage that was caused by that broken pipe, whatever it may be, to the drywall, the baseboards of the flooring, or what have you. So what is hurricane damage? I'm not going to go too much into this. If you've lived in Florida for a while, the different Safford-Simpson scale, the categories of hurricanes. But typically a hurricane begins with 74 miles per hour winds. So I want to bring up a point, though. For example, to a roof, a shingled roof, do you have to have that high of a wind to cause damage? And the answer is no. For example, if you've got a 20-year-old roof, we've discovered that a 20-year-old roof can have winds of 45-mile-an-hour gusts, and that's enough to cause damage, as opposed to a new roof that's built to current building codes that wouldn't even blink at that kind of a wind. I'm going to talk a little bit about the types of adjusters that are licensed in the state of Florida. There's an insurance company adjuster. This is a W-2 employee. For example, you may have seen commercials on television that State Farm has with Jake with State Farm. He's got the red shirt and the khakis. Well, Jake is an insurance company adjuster. He's W-2. He's on staff. He's paid directly by the insurance company. Then there's the independent adjuster. That's a license that I held before I had a public claims adjuster license. They're hired by the insurance company to go out and evaluate the damages. They only work for the insurance company, and they are to keep the insurance company's interest in mind. And that's what I was trained to do when I was an insurance company adjuster, an independent adjuster, that I was taught that I was the eyes and ears of the insurance company. If I saw a trampoline in the backyard, then I should take a picture of it, because that exposes the insurance company to more risk, and they want to know those kinds of things. If there's a dog that's an aggressive dog, they wanted to know things like that. And so we were the eyes and ears of the insurance company. And then there's the public claims adjuster. And this is the only license in the state of Florida that is allowed to negotiate and act on the behalf of policyholders. Not all states have public adjusters. Alabama doesn't. But an attorney can also act as a public adjuster. But a contractor may not act as a public adjuster. So beware of unlicensed and unregulated people who are consultants. So what are the roles of a public adjuster? And this is going to list a few of them here, but basically as a public adjuster, we're going to quantify and document a claim. We're going to assign a value to the loss. We're going to compare the damages with what the policy says, and then write a number that is associated with what we value the loss to be. And so the question becomes is who's evaluating it for you? Is it or your community? Is it the insurance company adjuster that's putting a value on it? Or is it somebody like a public adjuster that's putting a value on it? There's certain compensation fees for public adjusters, and they are paid by the policyholder. The insurance company does not pay the public adjuster. The range is anywhere from 10 to 20%. And we're going to talk a little bit about that more of why there's a difference. But basically, it is a contingency fee by law. A public adjuster may not collect a fee unless a public adjuster brings money to the policyholder. By law, if there's no recovery, there is no fee. So there's no out-of-pocket expenses to hire a public adjuster. It's only at the claim settlement is a public adjuster allowed to collect a fee. And there's Nicole. She's one of our public adjusters. So basically, what are the rules? Have you ever tried to play a board game such as Monopoly or any of the other board games and you don't know the rules? Would you say that you're at a disadvantage for somebody who does know the rules? For example, let's imagine a board game, and it has 4 corners. Well, on the one corner, let's say the policy. That's the main rules. The policy dictates what's covered, what isn't covered, the conditions and terms of the agreement. A second corner would be laws, statutes that govern insurance, in this case in the state of Florida. You should know that an insurance policy, if there's a conflict with the statute, then obviously the statute trumps the policy. And then there's case law, a third corner of the rules. Case law is just how judges interpret the laws, and it's important to know that if you've got a dispute, say, with an insurance company. And then the fourth corner would be law and ordinance or municipality laws, building codes is the best way to say it. You've got to put things back in today's building codes. Other rules are fee caps in the state of Florida. If there's a governor declared state of emergency, which typically a hurricane is going to fall under, but it doesn't have to. I've had storms up here last spring where the governor declared a state of emergency, and those are capped at 10%. A public adjuster is not allowed to charge more than that under a state of emergency. There's a 60-day timeline for a public adjuster to provide an estimate to the policyholder and to the insurance company. There are rescission periods, and again, that depends on whether or not it's a regular claim or a state of emergency. Under a regular claim, a policyholder has 10 days to cancel a public adjuster contract. No questions asked. Just say we want to cancel, and typically you might have to put it in writing, but you've got a 10-day right of rescission period, as opposed to a state of emergency that was up to 30 days. A policyholder has 30 days to cancel a public adjuster contract. But a public adjuster's duties are only to the policyholder. We're going to talk a little bit now about how to identify damages. Okay, so in exterior, obviously roofs, walls, stucco, the siding, the windows, doors, balconies, those are things that should be inspected, especially after a hurricane. I want to make a point about windows. That's the most overlooked damaged item that I see, especially in condominiums and communities. What can happen during a hurricane, basically due to the pressures, you may not have anything impact a window and actually crack it and see visible damage. But what you'll notice is maybe 3, 6 months, 9 months after a hurricane, windows are fogging. Well, the seals have been broken, but it just hasn't manifested itself into a visual observation that can be seen. But so inspections are paramount. Sometimes it requires an engineer to come out to do a test. I'm going to stop here and tell a little story. After Hurricane Sally in the Panhandle in 2020, I live in a townhome community, and next door to me is a condominium, and I walk my dog by there all the time, and I noticed before the storm that there was fogged windows everywhere. In other words, so there was some kind of damage to those windows. The seals had been broken. It turns out they hired me to represent them, and I called an engineer out, and we tested those windows. During a window test with the engineers that we use, they'll go into the unit, they'll remove the window sill. Okay, now what's exposed is the framing, whether it's the metal framing or wood framing, and you can visually observe, and you can see if those windows have been leaking. You know what it looks like. If they've been leaking, you'll see dry rot, you'll see the water stain, it'll be dark. But in this case, when we pulled the sills off, not one window, even though they were fogged, but not one window had been leaking. So now the engineers, they put this little containment around, and they simulate rain hitting the window with certain pressures, and every one of those windows leaked. So what did that prove? It proved that before the storm, even though they were fogged, they did not leak. But after the storm, they did leak. And I was able to put $400,000 into that community's pocket by using that. Now, there's cost for that. That cost $40,000 for that engineer to come out and do that. I don't know if you think that's a good rate of return, but if you were to ask me, he'll give me 40,000 and I'll bring you back 400. That sounds like a good rate of return to me. But it was something that I had to talk to the board about. This particular engineering firm comes out and does a pre-assessment so that we kind of know ahead of time what the results are likely to be. So. But who's doing your inspections? Because they're paramount. Do you, if you've got roof damage, did you just call out your contractor who put the roof on 10 years ago, and he just says, nah, I think we can just patch it up? And especially on tile roofs, you may not see that tiles have been broken, but the tiles are not what's keeping the water out, right? It's the underlayment. And what happens is those tiles move like this during a storm, and the fasteners come loose. You may not see it directly right now, but maybe a month, 2, 6 months down the road, you're starting to get roof leaks. And that's what we're noticing. We take a top-down approach when we inspect properties. We usually start with the roof and the exterior and then go to the inside. The picture you see there, that's a thermal imaging camera, and we carry those. That helps us determine if there's any water damage that can be unseen. Again, that camera is a thermal imaging camera, though it only tells temperature. It doesn't tell moisture. It just really will point us in the direction of where to put an actual meter to see if there is actual moisture. We know how to spot anomalies, but we also look for collateral damage. What happened to the neighboring properties? Do we see tarps on roofs, things of that nature? After a hurricane, typically you will. I'm going to talk a little bit about dispute resolutions. Now, what do you do if your insurance company comes back and you've been given a valuation that you disagree with? And again, that goes back to who is looking out for you, who's putting the number on the value of this claim. Is it the insurance company, or is it another professional? And so dispute resolutions, there's 4 ways to settle a claim, and we're going to talk about that. Negotiate a settlement. You can go to mediation. You can go to appraisal. That's not a real estate appraisal. and we'll talk about that in a minute. Arbitration, and then the final one being litigation, filing a lawsuit. Most people I know like to avoid lawsuits. Those are the options for dispute resolutions, but the first one being a negotiation, basically you've got to know the value of your claim and you've got to be able to back that up. We, just like most public adjusting firms, use a software program called Xactimate. We use that because we know that the insurance companies use that. And that way we're speaking the same language. I am an expert in Xactimate and have provided expert witness testimony in court cases on the proper use of that program. And so me personally, I know how to defend every single line item in an estimate that I prepare. So let's go to the next one. Mediation. So mediation is available for any claim in the state of Florida where there's a difference of or dispute of $500. It's a non-binding procedure. Either party, the insurance company or the policyholder, can demand a mediation if it's greater than $500. And what happens is the department assigns a mediator. They're typically conducted over a Zoom call. If I'm representing someone, I do all the talking, I present, and we try and negotiate. It's usually finding a middle ground. Typically, they're settled with a release. In other words, the policyholder will sign a release stating that they're not going to claim anything more on this particular claim. Excuse me, in exchange for getting all the money up front in one check, instead of having depreciation withheld, things like that. If you've experienced that, and if you have any questions about that at the end, I can talk about that. Appraisal is usually available in most policies. It's not, like I said, not a real estate appraisal, but it's an appraisal where two independent appraisers go out and assign a value to the claim. The policy is going to dictate the rules. Typically what we see is if either party can demand an appraisal. Most policies now have been changed, though, where it says that both must agree to the process. So in other words, one party can demand the appraisal, but the other party can say, no, we don't want to do that. But then again, there's other policies that say that either person can demand, and you've got to go through that process. Again, you've got to know the rules by knowing the policy. And this is a binding process, though. In other words, it's like a judge, jury, and a gavel coming down. Whatever happens in this process is binding. What will happen is each party will assign their own appraiser and is responsible for the cost of that appraiser. And then the two appraisers will select an umpire. What that means is if the two appraisers don't agree, then they will take it to the umpire. So there's three people on an appraisal panel, and when any two agree, then it's over, and that's it. Arbitration. There's a lot of small writing in this particular slide, and I want to talk about this because the devil's in the details, right? In this particular slide, under the policy conditions, it has an arbitration clause, and when you read that, it sounds innocuous. In other words, it doesn't sound very threatening. It sounds like, okay, it's just another process. But then when you read closer, you'll see in this particular policy that the seat of arbitration shall be in New York, and the arbitration tribunal shall apply the law of New York as the proper law of insurance. Now, I don't know about you, but whether or not you think that's a good idea for Floridians to have to adhere to New York law. These are things that should be uncovered ahead of time before you have a claim. Can you get this kind of stuff out of your policy? And the answer is yes. You may have to exchange that for more premium, but that's an agent question. You should go to your agent. Typically, we will see this kind of language in older properties where surplus lines, or in other words, non-admitted carriers, are allowed to write insurance. And what that means is non-admitted carriers don't have the protections of FIGA, the Florida Insurance Guarantee Association. FIGA with an admitted carrier, if they go bankrupt, then FIGA steps in and pays all of their claims. And you just don't have that protection with a non-admitted or a surplus lines carrier. And then last is litigation. Personally, and throughout our company, 83 or 85% at last count of our claims are settled without having to use attorneys. Now we need attorneys. They're good when you need them. But if you don't have to, you're certainly going to lengthen the amount of time that a claim will get settled. But the laws have changed. You can't just up and sue an insurance company. The first thing you have to do is file what's called a notice of intent to the carrier that you're intending to file a lawsuit. And then there's a grace period of 10 days, so to speak, where the carrier has 10 days to try and resolve it in another means before an actual lawsuit is filed. Okay, we're going to talk a little bit now about exclusions. This is what you should know about exclusions. We talked about a contract of adhesion. Judges interpret exclusions very narrowly as opposed to coverage questions, which are interpreted broadly. In this particular exclusion of the policy, pre-existing property damage is excluded. You know, usually it will be under wear and tear. You might see a claim determination that says wear and tear, and they will use this exclusion to deny the claim. And I'm gonna ask a question later on. Well, I'll just wait till I get there. But you need to know what the exclusions are, and this is typically uncovered in advance rather than waiting to read the policy after you have a problem. This is another exclusion that we're starting to see, a public adjuster exclusion endorsement. This means that basically you can't use a public adjuster to represent you. You'll have to go straight to an attorney if there's no other resolution process that can be used, but you can't use a public adjuster. What I will tell you is, and I won't talk about it in this setting, is that we have a way, and you can call me personally if you want to discuss that if you do have a claim and it's got this exclusion, how we can still help you. All right, moving right along. The insurance claims process, 7 steps basically for the process of a claim. The first one is to inspect it, collect all the data, find all the damage, do a very thorough inspection, thermal imaging, get on the roof, look at the windows, inspect the interiors, things of that nature, and then document it, photo document everything. Then draft a scope of repairs. You know, what's it going to take? Well, you know, I've got a 3-foot water spot on the ceiling, so the scope is let's remove and replace 32 square feet because that's the size of a sheet of drywall. Let's go ahead and remove and replace that, and then paint it, everything to match it. That's called the scope. And then we write an estimate to match that scope. Then we'll file all the claim forms. Everything that needs to be done with an insurance company, all those forms will be filed. Sometimes they may request further information. They may want to have a recorded statement from the insured. These are all policy conditions. a public adjuster would meet with the experts. If the insurance company sends out an expert, their engineer, then somebody should be meeting with them, representing the community, and then press towards a favorable resolution. By the way, just I wanted to make that most of this is directed towards communities and HOAs and COAs, but all of this still applies to your own home as well. Avoid special assessments. How many of your unit owners like special assessments, right? So in this particular slide, we're going to talk about how to prepare in advance of a hurricane, which is now. So usually policies for COAs, my slide says HOAs, but those may be different for townhomes, and I'll talk a little bit about that. But typically a COA for a condominium building, the insurance policy covers the entire exterior envelope in the common areas: the roof, the windows, the doors, the balconies, the stucco, the siding, and then the paint. All of that exterior protection is covered under the master policy for the association. A homeowner's policy is going to cover usually from the drywall, from the wall covering in. The drywall would belong to under the master policy, but the wall coverings, for example, wallpaper, texture, paint, things like that are going to be covered under the unit owner, typically an HO6 policy. This is where some confusion can arise too, because most of the condominium documents that you see, the maintenance of the windows and doors falls to the unit owner. For example, a unit owner wants to replace a slider. It's gotten old. It hadn't been damaged by an insurable event and they want to replace it. And maybe they go to the board and they say, hey, I need approval for this. And that's on them. But if there's an insurance claim from a covered peril, it falls under the master policy of the condominium, not to the unit owner. And that's a big deal, especially with high deductibles on condominium buildings. I mean, you might have $2 million worth of deductible before you ever meet the threshold to file a claim. And this is typically where I see boards decide not to even file a claim. And here's the danger in that. First of all, you're not penalized for filing a claim. Statutorily, you're not penalized. So I lost my train of thought. So usually an association or the board will go, it's just not going to go above the deductible. What'll happen is now another claim comes up. We have another storm this year, and not all of the damages, there wasn't a claim filed last year for the hurricane. And so the risk is the insurance company saying that happened from the last storm. You should have filed this under the last storm, and it gives a reason to deny a claim. Let me just read. So how do you prepare? Get baseline inspections regularly. Typically, most associations have a maintenance person who's on top of it, but keeping good maintenance records. Copies of CGCs, and I'm going to talk a little bit about that more. A CGC is a certificate of good condition. Have vendors on standby. So think about it. What are you going to need for a hurricane? What kind of vendors are you going to need of an immediate nature? You would need roofers who can put a tarp on a roof, not necessarily re-roof it, but just to do some temporary repairs. Excuse me. Vendors who can board up. A tree or something flies in through a window, at least you can get that boarded up. Water damage mitigation companies, companies that have the drying fans, and they can come in and at least get all the wet stuff out and start getting the building dry. And are you vetting them? Are you looking up and seeing Google reviews? But these people should be on standby, ready to go. And again, having your records organized and available. I have had claims before where flood waters have come in and all the file cabinets and all the records were on the first floor and they all got destroyed by flood water. So if you have the ability to get it up on a second floor or above what might be reasonable for flood waters to hit, that would be a good idea. So how do you know how much you're owed? Well, ask an adjuster. Who's going to pay? Does the insurance company pay, or are you going to make a special assessment? So several years ago, the state of Florida did an analysis. It was called the OPAGA report. It's from the Office of Program Policy Analysis and Government Accountability. That's a lot to say. But they just provide data to the state of Florida for the legislature so that decisions can be made and budget and policy deliberations. But what they found in this report, this is not my report, it's not another public adjuster's report, is that you will get up to 740%, 747% more out of a claim by using a public adjuster as opposed to handling it on your own. This particular slide was done off of a hurricane claim, off of residential claims. My experience has been, though, that these numbers are accurate. So what's the number one cause of denial? I alluded to it earlier in a slide and said I'd talk about it, and it's pre-existing conditions. In other words, an insurance company may say, well, that happened in last year's storm and it's not part of this year's storm. And we're going to talk about how to combat that. And here's the CGC. I talked about it earlier, the certificate of good condition and what it includes. So our company, and it doesn't have to be our company. There's other companies that can do. You can hire a home inspector, you can hire engineers. It's just that our company does it at no cost. We come out at no cost. You just call us up and say, Hill, we want a certificate of good condition. And it'll be me personally, or I will find somebody within our company to come out there and do a walk around of the policy and document it with photographs. And then we give you this report. We don't give you every single photograph because we usually can take a couple of hundred in one inspection for a large community. But what it'll include is an inspection letter or certificate, but basically it's a time and date stamp of what this property looked like before there was any damages, say from a hurricane. Well, it'll also introduce our priority inspection program. What that entails is let's say there is a storm and we have issued you a certificate of good condition. As you can imagine, we get a lot of people calling us, but we give you priority to handle your claim as opposed to having to wait, in some cases, 30 days just because of the sheer volume of claims that come in. It's got some reviews, but that's the certificate of good condition. So when is the best time to prepare for a claim? Obviously now, before anything happens. There's a scan code on the screen. You can scan that. There's no cost for this. So also included in this is a policy review where I just did one yesterday, and I looked at this guy's policy. There wasn't any damage to his house, but I looked at his policy and I just saw some horrible things in there that if he did have a claim, he was going to be very limited in what he could recover for the premiums he's been paying. This is a slide. This was after Hurricane Ian. This was a community, I believe, in Fort Myers, that golf course community, and you can see all the buildings in the background. The insurance company came out. They put a value on this, on the damages here at $2 million. Oddly enough, that was the deductible, so that there was no payout on this particular one. This community called us up, and we settled it within 10 months for 10 million, and there was no litigation. I think, yeah, this one was settled in the mediation process. And that's all for the presentation. So I did it in 48 minutes. The rest of the time, you'll still get full credit for the 1 hour. The rest of the time is my favorite part, and that's answering any questions that any of you may have had along the way. So we'll open it up. Carla, do we have any questions?
Yes, we just posted on the Q&A section.
Okay. How do I look at that?
I can read these out for you, Hill, if you like.
Yeah, please.
So Elizabeth asked if a non-maintained or you know, your typical, I'm assuming this is in relation to like a preserve area behind a home, for example. You know, you've got your typical trees back there, typical forestry. If a tree falls on the homeowner's fence, whose insurance company is responsible for handling the claim, or who's responsible for that?
Yeah, super question. So your insurance company, that if it's your property that got damaged, then your insurance company, it triggers under your policy. Now, what will happen is most all policies I've ever read, there's a subrogation clause, and you don't have to worry about it if it was somebody else's fault. In other words, you warned them that that tree was rotten, and now look, it's come and damaged my home, then your insurance company will go after them to try and recover the money. But it is your insurance company that's obligated to make you whole. Thank you.
Yeah, it's a good question. I've seen that a number of times, just, you know, being in this profession, and every hurricane that, you know, we get a lot of that repeat question. Carla, I didn't see any other questions. Did you see anything else in the chat or the Q&A that we missed?
No, not so far.
Okay. Well, then we'll kind of do a final call for any questions. If anybody wants to put anything into the Q&A or into the chat that might have come up as Hill was presenting.
Yeah, I actually have a question. If you can, about the certificate of good condition. Can a homeowner in a townhome community do that, or does it has to be the HOA? Because the policies are different.
Yes, another great question. And yes, we do certificate of good conditions for anybody who has a policy. I will do one for your home, Carla, if you want.
Thank you.
And again, it's no cost. I can look at your policy and say, hey, these may be some pitfalls, but yeah, so every policy can have its own certificate of good condition. Super question.
Excellent. Hill, I'll send you my address after this so you can come out and do a CGC.
Yeah, I'd love to. I'd love to.
All right. Well, I don't see any other questions. So, Hill, do you have any parting words otherwise, or otherwise I'll just wrap things up here?
Yeah, the only thing I would say is go ahead and scan that scan code to put us in your phone, because here's what happens. You're not going to remember who I am later on, but if you just type in adjuster, it's going to bring that up. And you'll be able to remember it. If you forget, ask an adjuster. If you forget, Hill Crawford.
Taylor, we have a new question here.
Okay. Let's see. Where is that?
Arlene is asking, is in an HOA with no building, what is covered?
HOA with no building. I don't know if I understand that. Why would there be no building?
So we're talking about an association that doesn't own any property, is what I'm assuming.
Oh, I see. Yeah.
Or only owns landscaping and, you know, entryways, roads, you know, nothing with an amenity or a building or
So I
to know
have
something.
seen associations like that all they had was coverage for the fence that went around the property. And, you know, those are very limited policies. Typically the deductibles are low, and so the policy's only going to cover that. I live in an HOA in a townhome, and it's interesting because the bylaws say that the maintenance of the roof is on the association, but I have to have insurance on the roof, which goes up from the party wall up in an imaginary straight line. That's my roof. In other words, I have to insure that roof. And so this policy covers only that portion of the roof. Yeah, it gets tricky, especially in townhomes, where, you know, it's a question of ownership. Condominiums are all the same. Condominiums is Florida Statute 718-111, which specifically says who has to insure what. Did that answer the question?
I think so. All right. I don't think there's any other questions. So Hill, thank you for all the information. That was a lot of good information there. The CGC inspections, preparation tips. I think there's a lot of value in you know, being prepared, whether it's just having your contact information so you know who to reach out to having that inspection completed and having some documentation to provide, you know, in the event of a claim. But definitely want to encourage everybody, you know, use that for what it is, take into consideration that preventative action that you can take now before the storm season comes. Have documentation, have a plan in place. Again, one of the things that we're focusing on at Rizzetta is having, you know, inspections done in advance as well. Ours is not geared towards buildings like yours is, Hill, but ours is geared towards, you know, the landscape aspect and the field component and you know, monuments, streetlights, landscaping, all of those things. So you know, just be prepared and be safe as we enter that season of the year here in Florida. And thank you all so much for joining us on the second edition of our webinar series. Again, as always, our website, Rizzetta.com, will have the slides and everything for availability for you all afterwards. Give it about 24 to 48 hours, and those will be posted, and you can share that with your communities or your fellow CAMs or otherwise. So thank you all so much for joining us, and have a great rest of the day. Thanks, Hill.
Thank you. Bye.
Take care.